We're joined now by Eddy Fong, Chairman of the Securities and Futures Commission in Hong Kong. You've been talking here at the INSEAD Leadership Summit in Asia about the financial crisis. To some extent, regulators have had something of a bad press, haven't they? Given that you're being blamed in part for what's happened. It's been a failure of regulation.
Put it that way, I think whoever takes up a job as a regulator, I think you have to be well prepared for this, because from past experience, it's also has always been like this. When there's a boom market, people tend to ask for less intervention because any regulations is seen to be not conducive to market development. And in a crisis period like what we are facing at the moment, obviously we had a lot of criticism why you are not that and why you are not aware of that and this. Or sometimes they even say why you are sleeping behind the wheels. So I think yes, we will take in all the comments and observations, from the community, and you just have to move on, because the financial market itself is moving so quickly. So if there are any things we need to do as a regulator, I think we will try and do it. We take it positively.
Well, we've seen the markets come off a lot. I mean, as you were saying within the session, in Hong Kong and China, the stock markets have come way off their peaks from about a year ago. Haven't seen mass panic though. I mean, these are retail markets, but there's a downside sentiment, but there isn't the panic, is there?
Yes, I agree with you. The downside sentiment is much more severe than panic. At the moment, I think a lot of people who have bought in the stock market, in particular in Hong Kong, because we are a slightly more mature market. We've gone through all these ups and downs for many times, and if I remember correctly, in the last 3 decades,
Well, I remember 1987. I covered the crash in Hong Kong.
Or even before that, 1973, we had the boom, and the market just crashed down like anything, And we managed to recover. And so in Hong Kong, the market the investor has reacted. They are not happy, but they have reacted sensibly at the moment. But in China, it's a different ballgame, because it's a new market, and they never experienced the sort of boom they enjoyed back in October 2007. At the time in mainland China, the Shanghai index was around about 6,200, and just yesterday it was probably around about 1,700. So that was a severe drop. But again, because in the mainland, people, this is their first experience, so the sentiment there is much worse than in Hong Kong as far as the investors are concerned. But the only thing is in the mainland, because there is no margin lending. So in a way, they are quite steady. Yes, people lost money, but they don't borrow. So obviously, no one wants their investment to be depleted overnight. But on the other hand, since they didn't borrow, so I think in terms of stability, is still okay.
But we haven't seen anything like what happened in '87, when the Hong Kong Stock Exchange actually had to close its doors because of the...
Oh, that was '87.
'87, yes, because of the trading situation.
Okay. We've been watching that very closely, but I think the stability is the main thrust of our work at the moment. When there is big volatility in the market as far as the Hong Kong Securities Commission is concerned, we immediately talk to brokers, intermediaries, we talk to asset management company, and we talk to analysts in town and make sure that what's the reason of today's downfall in market and all that. So we keep a very, very close eye on what's happening. But of course, we can't control the market, because it's all, by individuals and by institutions who sort of, want to trade in and trade out of the market.
You've been talking here about how the regulators are looking into making changes, but it might be another year or something before we actually see concrete steps towards bringing reforms. It seems as though it's a lengthy process, though, as to how this is going to pan out.
Okay. our approach to this is at the international level, we are already looking at, for example, some obvious area we should be looking. For example, the IOSCO, which is the International Organization of the Security Commission. We are already looking into issues like credit rating agency, the way the investment products are being sold by intermediaries, and to a certain extent, investor educations. So the areas which we are look at already, it's been looked at, and international, I also, publish the standard, from time to time. So, some of the areas, some of the weaknesses in the system, I think we will encourage the market to comply with it. Now, in terms of moving forward, I think one of the issue is to look at the how the market will react in the future, because at the moment it seems that there are banking crises. Although this is not strictly my area, there are crises in the derivatives market, and also the way how the various regulatory agencies should perform their function properly and separately. At the moment, in certain countries, like in Hong Kong, the regulatory regime was separate, and a lot of people say, they start asking the question whether there should be a super body, super regulatory body, like in London, the pros and cons. And we listen to people. We got to take the opinion from the market and to try and formulate the policy. At the moment, we are doing whatever we can. But how the market will be reformed or transformed, I think it will take a bit of time. If you look at what's happening in the U.S. and what's happening in Europe and in the U.K., at the moment, the regulators there are really, or the central bankers are all fighting, to try and calm the panic. And in fact, I think the priority, as I can see there, is to try and restore confidence. And obviously, the new when the reform comes in, it will come in with the regulatory reforms.
But are major changes required? Or do you think
I'm sure there will be major, but it's a little bit too early to say that. I think we got to. For example, the people were talking about investment banking. iBank. Whether they were the problem of today's financial crisis or not. But a few of the big four no longer survive. Bear Stearns been rescued, Lehman gone, and the other two, Morgan Stanley and Goldman, they are converted into banking institution now. So all these, we'll let them settle a little bit and then see what we can do. And in places like Hong Kong and Singapore, our economies here and are much smaller. And a lot of the financial institutions in Singapore or in Hong Kong, they are primarily subsidiary or branches of the U.S. or U.K. or European countries. So we are obviously, as regulator, we got to monitor closely as to what happened, in their own country, and see how it develops from here.
At the core of the problem, is it that the markets have become too sophisticated, too complex, that people are selling products they don't understand, and you have people who are trading in these products who really, you need rocket science degrees to be able to figure out what's happening to the markets?
Well, I think what you pointed out is probably correct, but the problem as we have today is really like a supply chain. And what you've been mentioning is actually at the tail end, whether the products are sold properly to the right investor or not. But in the earlier the front part of the supply chain is that the economy, in particular in the West, has gone through a period of low interest rate, and there were investors they are looking for. They all have the bigger appetite to take risks and to look for better return. And so, it's the whole spectrum. It's not something you can say this is the reason and that is why it's caused the problem. It's the whole supply chain action. But luckily in Asia, we are actually at the tail end in that a lot of institution individuals, they buy into products which they don't understand. So they have to try and write it off, or take the punch. Whereas I think the effect on the economy will be much greater in the West, because the supply chain, the front part of it is primarily in America or in Europe. And this is why you see a lot of banking institutions now talking about retrenchment and all that. It's because they are not sure whether this type of products will still be viable or not in the near future.
But as you said at the end of the session today, maybe this time next year we'll be talking about what are the actual reforms that are needed to sort out the problem.
I'm sure the regulators around the world will try and work this out. And it's not something the regulators can fix it themselves. I think, as I mentioned, there are 3 types of discipline which are required. One is the self-discipline, which is the institution themselves. The other one is the market discipline, and then finally the regulatory discipline. And no regulator can guarantee no failure. I think let's not forget about it. We can provide the basic rules and regulation and code of conduct and ask the industry to behave. At the end of the day, it's also for the market to decide that, if a certain investment product or project are too risky, should they or should they not put their money in it. I think that's also a very important aspect of discipline.
Eddy Fong, Chairman of the SFC in Hong Kong, thanks for joining INSEAD Knowledge.
Thank you.